Today we're going to talk about money as a freelancer. The big M word that everyone is scared about. And I'm not going to give you financial advice, but I'm going to give you some suggestions on how to direct the flow of money, because I realize that a lot of freelancers just getting started don't know how to use their money in an effective way, which creates very negative mental health problems. So, long story short, when it comes to money, we need to talk about banks, because banks is where you store your money, and it is not recommended to put your money under a pillow. That's going to be the worst way to save money for a rainy day. So most people put their their money in a safe place, like a big bank. I personally use Chase for my personal banking, and then there's other big banks inside the US that you could use, like Bank of America. Now the problem is Bank of America is the worst, and then Wells Fargo also does a bunch of shady nonsense. So when it comes to working as a small business, as an artist, as a freelancer, most people just getting started they have their bank account at one of these big banks, and they typically have a checking account, which is for things like your house, that's a house, or your car, and I don't know, your dog, that's a dog, burp, burp, that's a dog, sure. Or you have your savings account, which is going to be for saving things for, like, I don't know, retirement. But also it gets really cloudy and confusing, because when you're a small business, you're like, oh, do I need to save for a computer, for my, I don't know, making my art sort of thing? So the reason why having a single bank for your personal and your business is a bad idea is whether you're doing your checkings or your savings, it's really confusing on what money you have for specific purposes. And this creates negative mental health problems, like I said, and that is going to create a scarcity mindset, where you're not going to want to spend any money at all, because it's like, should this be for my business? Should this be for my personal stuff? Do I have enough money for rent, etc.? So, long story short, we don't want to use big banks for our business or as a freelancer. So, I like to use the model from a book called Profit First by Mike Michalowicz. And this requires having 5 separate bank accounts. Now, these 5 separate bank accounts are labeled here. We have our revenue right here. We have our profit. We have our taxes. We have our owner's compensation. And we have our OpEx. So the way these bank accounts work is that revenue is where your clients give you money. This is where all the inflow of cash comes into your business. It is everything that is like, I'm doing work for money as a freelancer. So as an artist, you could sell paintings, you could sell videos, whatever else. Then you have something called profit. Now, profit is your guilt-free spending. And this is basically money that you can spend on anything you want. It should be fun, should be awesome, because as a freelancer, like, yes, we work for money, but to live a life that's actually fulfilling and fun, we should have some money that should be for fun. Then you have to pay the government, so there is taxes, and that's pretty much straightforward. Pay your taxes. Always. Just pay them. Now, then you have your owner's compensation, and that is all the money you get to buy the things like your house or your car. So this is personal. Your house, your car, your dog, medical bills, etc. That's not related to your business. And then you have your operating expenses, which is all of your business expenses. So why do you have 5 bank accounts? The reason why 5 bank accounts exist is because whenever you open your phone and you're like, how much money do I get to spend today? You don't have to like guess at looking at a single checking account. You can be like, oh, this thing that I'm buying, like an iPad, that's a business expense. That's operating expenses. Do I have $3,000 in my operating expense account to buy this iPad? And if not, then maybe I shouldn't buy the iPad. But if you're buying something fun like a vacation, do I have, let's say, $10,000 in my profit account to go on this cool vacation? So, okay, we have these 5 bank accounts, but how do we organize this. The first thing is that you need specific percentages. So in Profit First, he calls them TAPs, target allocated percentage rates, or whatever, but it's basically broken down like this. Your revenue is always going to be at a balance of $0. This, at the end of every month, whenever you do all your personal finance stuff and your business finance stuff, you should move all the money that's in your revenue account into your profit account, tax account, owner's compensation account, and then your operating expenses account. Now, how do you break this down? Percentages. It's super easy math. You basically want to make sure that the total of all of the accounts, all the 4 accounts below your revenue account, adds up to 100%. And if that's correct, then awesome. Now, in the book, it's highly recommended, just when you're just starting out as a small business, to set your profit to 5%. It's a small number. It's not going to be a crazy amount of free spending, but it's just enough to be like, oh yeah, this is actually worthwhile to have some money. So how do we break this down? Let's say hypothetically you get a payment from a client that is for $10,000. Which is awesome. Amazing. You booked a $10,000 project. It could be $1,000, it could be $100. It really doesn't matter because percentages are neutral regardless of the amount of money. So obviously we need to think about how we break down this $10,000. So that means that if we make $10,000, our profit for that project, and we pay that to ourselves first. We don't spend it immediately, but we get to say we made $500 on that $10,000 project. And that's awesome. We could spend $500 now, or we could save it for a vacation. Sure. Then after that, you have to go and save some money for taxes. You have to pay the government to participate in their global economy. So that means that we need to save, set aside, or save, whatever you want to call it, $1,500 of that $10,000. Now the remainder of that $10,000 goes to your owner's compensation, and this is for your personal spending. So this will get transferred into your personal bank account, like your Chase, your Bank of America, etc. And that's going to be $4,000. And then the remainder is also another $4,000. And then that should give you a total of $10,000 that you've made, that you brought into the from the project, but you made $500 guaranteed. You personally pay yourself $4,000 to go do like the work and also like be a human being, and that's your personal stuff. And then if there's extra expenses to make this $10,000 project, which there likely will if you're doing a $10,000 project, like, I don't know, buying a paintbrush, or you're buying, I don't know, a camera, camera, like so, and you need to make this cool $10,000 project, you have $4,000 to spend to make that project happen. Okay, cool. So we talked about how to separate the accounts. It's important to remember that these TAPs, these allocations of percentages, can change, and it is going to be dependent on your tax situation, your personal finance situation, etc. So generally speaking, first off, this is not tax advice, so make sure you know how much money you need to set aside for taxes. The book, Profit First, does recommend around 15% to 30% depending on your situation. Now, in the past, I have had other tax situations where I would allocate 30% to taxes, which means that I would go to my operating expenses and make sure that I am, instead of paying 25% or 40% for my OpEx, I'd be using 25%. So that math would instead turn out to be, instead of $1,500 for taxes, we would be using $3,000 for our tax account, and then this would be $2,500. And this just really depends on your situation and completely dependent on you. So go talk to an accountant on what you need to live. Some people have very complex tax situations. Some people have very simple tax situations. So highly recommend the book. But generally speaking, if you need to change any of these percentages, you're taking it from the OpEx. And if you have to do that, you're basically operating your business a little bit leaner. So that's generally the summary of Profit First. Just use percentages. Now, okay, how do you do this? I mentioned earlier that the big banks that we talked about, That's going to be like Chase, Bank of America, Wells Fargo. They're not cool. We don't like them sometimes. And the reason why we don't like them sometimes is because if you want to have multiple bank accounts with Chase or Bank of America or Wells Fargo, you have to pay additional fees. You have to maintain a minimum balance of some amount of money, and it's just really annoying and time consuming. So there are other small businesses, small banks that are going to help you with this. And so that being said, I use the bank Bluevine. And the reason why I use Bluevine is that's the one I just got into, and at the time when I was doing my own finances for my small business, it was the one that popped up most. And if you do a quick Google, it's gonna be there, and it's pretty great because it has high interest rates. I'm not going to say the rates because those things change over time, but long story short, I like Bluevine because if I have more money in the bank, I get more interest on it. But there's other ones that are recommended from other YouTubers like Found and the people on the YouTube side, that this is the play button for YouTube. People recommend it. I'm like, okay, cool. There's also Relay or Lily, or you could do this with accounting software like QuickBooks or any way you want to manage your money. But the reason why you use a smaller bank like Bluevine, it's typically a software service. They do not have physical locations, but they have no fees for having multiple bank accounts. So I guess the no fees would go down here. Why do we use a smaller bank like Bluevine? There's no fees. And then also they are FDIC insured. So FDIC, which basically means they're insured by the federal government. So if something terrible goes wrong, you're at least going to get your money back from the bank, sort of thing, because the government is going to back them. So obviously you need to do some of your own research on figure out what bank works best for you. I personally use Bluevine, and I've had no issues. And the reason why is, again, no fees, and it allows me to have those sub bank accounts that I mentioned earlier. So I have one bank account that's called my revenue account or my income account, and then everything else below that, I literally call it, like, you can nickname the bank accounts. So I call this bank account Gov Stuff, and then money for me in all caps, and then business stuff, BIDNESS stuff. That's basically how I set up my bank accounts. So when it comes to starting a small business freelance career, the problem as artists that I have found is that we just want to go make the art. And when you go and spend a bunch of time trying to work with a checking account and a savings account, you're going to spend so much time in this scarcity mindset because you're not going to have any idea on how much money you need to spend on projects or for personal stuff. And when you follow a model that makes it very simple, you don't need to spend a lot of money on a big accountant. Obviously, you should have an accountant if this stuff is really foreign to you, but you should be able to do most of it by yourself with a little simple math of adding up to 100%, like so, and making sure that all the money you earn adds up and is split between all the corresponding bank accounts. So that is basically how I set up my small business finance, and I hope this video was helpful. If this video was helpful, please do let me know in the comment section down below, and if so, I will do another video on how I set up my personal banking as a freelancer who makes money doing video production and stuff. But until next time, as always, I will leave you with the final tip, and that is to eat 1 gram of protein per pound of body weight. You'll make some. Goodbye, my friends. Bye.